Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 30th of June 2024. We're publishing our gold and silver weekly update for the week ending the 28th of June. Gold was a little stronger last week, but silver dipped a little. This week should prove interesting. And what effect did last week's PCE figures have on precious metals on Friday? And what effect will the job figures this coming Friday have on those prices? Well, we'd better take a look. Okay, first just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. It has been almost a month since our last video was published there. There are reasons for this, as we are changing the technical content of the channel. Now, before we go into the figures for last week, an apology for quoting the wrong economic data announcements coming out of the United States. Knowing that we would be short on time, we attempted as far as we could to produce 2 weeks videos. Unfortunately, the second half of the second video, which constitutes this one, was used in error last week. Now, although our forecasts remain the same, and as we shall see shortly, was still extremely accurate, we wished our friends, our US friends, a happy Independence Day a week early. So our apologies once again. Okay, precious metals. Gold rose $5 last week, rising from $2,322 to $2,327, having been as high as $2,340 and as low as $22.92, a rise of just 0.2%. Gold spread between high and low was $48, even less than the previous week's difference of $62, so not very exciting. Last weekend we said gold would trade between $2,275 and $2,375, and it did this quite comfortably, closing almost in the center of that range. In sterling terms, gold was up £4 at £1,842 and was up €1 at €2,174. Silver, however, fell. It actually reduced by 40 cents, falling from $29.54 to $29.14, having been as high as $29.77 and as low as $28.60, a fall of 1.4%. Difference between high and low was $1.17. Now, last weekend we predicted that silver will trade between $28.31, which it did very comfortably, in fact, well within that range. In sterling terms, silver was down 27 pence at £23.13, and in euros it was down 0.41 euros at 27.26 euros. Because the silver price went down and the gold price went up, the gold to silver ratio rose from 78.6 to 1 to 79.8 to 1. Bitcoin currently stands at $61,557. That's down $2,730. Equities were broadly little changed, not much to really comment on. Dow Jones was down 32 points at 39,118. The S&P 500 down 4 points at 5,460. The Nasdaq up 43 points at 17,732. And perhaps the biggest loser was the FTSE index, down 73 points at 8,164. Oils were also a little unchanged, really. Brent crude down 24 cents at $85 and WTI crude up 81 cents at $81.54. The dollar index stands at 105.86, up 0.07 on the week. So really, in terms of figures, right across the piece, it was a relatively uneventful week. Now, last week we did see some interesting economic data coming out. New home sales were down by 79,000. GDP for quarter one was revised up by 0.1% to 1.4. And on Friday, the PCE figures showed no increase for May, and core PCE an increase of just 0.1%, the lowest increase for 7 months. This leaves the year-over-year figures down 0.1% for PCE at 2.6 and down 0.2% for core PCE at 2.6. Now, this coming week, we have the data we announced last week. Monday, final manufacturing PMIs for June. Tuesday, automobile sales for June. Wednesday, ADP employment report. Expectations are for 170,000 new jobs. Final services PMIs are also coming out on Wednesday, along with the minutes of the June FOMC meeting. Maybe worth looking at to see how dovish or hawkish the Fed is. Thursday, July the 4th, happy Independence Day to our US followers. We'll get it right this week. And on Friday, the US employment report for June. Bear in mind, the May figures were 272,000 new jobs, and expectations for June are 195,000 new jobs. A very important week, in fact, for data, and we should not be surprised if we see more movement in the markets this coming week than we experienced last week, but that would not be a particularly ingenious assessment in view of how dull last week was. Now, strong economic data could pressure gold, while weaker data and dovish Fed signals may support it. As far as interest rates are concerned, the conclusion of our view last week was that a Fed funds rate of around 3% is a perfectly acceptable ongoing medium to long-term rate, and the days of 0% interest are more than likely well and truly over. So, what do we predict will happen to gold and silver this coming week? Well, it could be argued that the positive inflation data could help gold resume its rally. Some analysts are actually predicting $2,600 gold by the end of the year. Silver prices may rebound if upcoming jobs data supports rate cut expectations, potentially outweighing pressure from Treasury yields. Traders are now pricing in a 68% chance of a Fed rate cut in September, up from 64% before the inflation data release. This shift has been a key driver for silver's recent quarterly performance, which was up. Our prediction, therefore, is that we will see gold trade this week between $2,280, that's $2,280, and $2,380. With an outlier range, in case the data is somewhat mismatched, of $2,260 to $2,400. Silver, we're expecting to trade between $28.50 and $31, with $28 to $31.50 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter. The channel's going to change, so don't miss out on that. And all that remains is for us to wish you a safe, enjoyable weekend, which is nearly over, and as always, a prosperous week ahead.